Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news so that we know what's going on and when, so that we're not taken by surprise. So looking at the news calendar later this morning, we have at 7 o'clock the EIA short-term energy outlook. That is a large news announcement that'll have an impact on crude oil and all of those. Going down a little bit lower, we've got the JOLTS job openings for November forecasted at 10 o'clock. Previous was 6.652 million. There's no forecast in the number for today. And then as far as the other news, it's just a bunch of speakers. We have FOMC member Bostic speaking, Kaplan speaking, Mester speaking at 11, 11, and 12. Going into the afternoon session, we have FOMC member George speaking, and then at 16:30, it is Tuesday, API weekly crude oil stock numbers come out. That'll give us a little bit of a heads up in terms of what to expect for tomorrow's inventories, but that's really about it. So with that out of the way, let's jump into some charts for today, the daily brief for today being 1/12 of 2021. Kicking things off with the NASDAQ, and we're kind of hovering around that zone of support. I really wanted to see the buyers defend that zone of support and not come back, right? That bounce was right there, and the market came back. We did have a 3-press wedge low, which was expected. That's what the market gave us. Then turns into a higher low and attempting to reverse back up. It is breaking above the wedge highs, but realistically, from a trend perspective, the last time we had a confirmed swing high was here, which we are still very far away from breaking. As far as measured movement goes to the upside, there is a potential for that initial leg, third giant leg, and then kind of final one that usually equals the size of the first one. But as far as the sequence goes, buyers are still holding L2s. We're continuing to see bullish momentum to the upside. Now we're breaking above this falling resistance, likely because we haven't really seen a break, structurally speaking. It might be a little bit better to see one more push to the downside and then back up, but we've already had the 3-press low. It doesn't have to. What would be even nicer is a higher low and then a rotation back up towards those 13,000s. Either way, this is kind of the pinnacle point of interest. It's just a matter of if it wants to pull back and how far it wants to pull back before hitting the gas pedal again. On the S&P, we've got a bit of a sideways, kind of choppy, sloppy market. The weekend gap is still open, and realistically, the way that the S&P is moving, we're making lower highs and higher lows. We're in a wedge. We're not really breaking out, up, breaking down, nothing, right? So nothing's happening here, and because nothing's happening here, we're in a range, and that means buy low, sell high, stay the heck out of the middle. Right now, it's right in the middle. This is a terrible spot to want to be trading the S&P. If it can get a little bit of a dip down into the zone of support, 3770s, that's where buyers will start regaining some interest to try to push the market back up again. They are trying to break above the wedge top. It's got a shot. Just saying that the shot probably isn't that great yet. Might need a little bit of a dip back down. And again, a 3-press low wouldn't hurt my feelings. So far, we've had 2, but it hasn't had that third dive, which it might very well be waiting for. Either way, buyers are interested. It just might be a little bit far up for right now. The gold market rallying higher, finally, looking for that 2-legged move, and it took some time. This is kind of sort of what we were looking for yesterday, but it just happened in a little bit of a weird way. We started off, and then it just kind of died going into the nighttime session before finally lifting back up. So you could argue that there's a secondary measured move in there. I still think it's all part of the same one. It went a little bit weird while it was trying to break out, and now it's got the completion. So the fact that the buyers have broken above, they've got completion, everything is lining up pretty nicely for gold buyers to overcorrect. We had the double overshot on the lows with divergence, and usually in that situation, they're going to try to overshot with an equal size, usually, the bottom to the top. Got a little bit of a ways to go until we hit equal size, and that doesn't start happening until the 1880s. Sellers will be interested, but it might have to go just a bit further to find the majority of them. Over on crude, it's hitting the gas pedal and raging to new highs. Great continuation to the upside. They're holding an L1 with another continuation off the bottom of the channel. The top of the channel is a bit ugly, but they did fill in that weekend gap that was kind of hovering around. That's out of the way. And looking across the board, we do still have this really wide, long sustained divergence telling us that this high is kind of weak. It's still going up, but it's telling us that it's kind of weak. And it's not a surprise. We were talking about the 52-53 area as a major profit-taking zone for a while. So it shouldn't really come as a surprise that we're seeing some weakness up here. What that usually means is to expect a wider pullback. We've got the initial rally up, aggressive buyers hold, aggressive buyers hold, aggressive buyers hold. Now a deeper pullback is what would be a little more likely. And that's the type of formation that you have with a spike in channel. The spike into the channel, price comes back to the channel point. That's where we're kind of waiting for at the moment. And that doesn't happen until back down towards the $50 mark again, which obviously I would still love to see. On the euro, we've got some pretty good attempt at continuation to the downside. Sellers had that descending wedge that broke and tried rotating back up. And remember, the big picture on the euro is very bullish. But as it stands, we're not seeing the buyers taking over yet. It's low, it's cheap. This is where long-term swing buyers in the bigger picture, they're going to be buying down here. But we really haven't seen a higher high, a higher low, a transition, nothing. A higher high would have to break above this confirmed swing high, which we've only got 2 legs up. And now we're holding a zone of resistance. It's not looking great. Realistically, this looks more like it's a situation for sellers to push back down, get another leg. But again, on the way down, we do have MACD divergence specifying that this low might be a bit weak. So if it does come back down to the bottom, expect there to be buying pressure there, sellers taking profit, and new buyers trying to pressure back up and get a bounce. It's a zone of interest for sure, but right now, as long as the sellers maintain this area at around 2,200, we're probably going back down to test the lows. And then over on the crypto side of things, with a big pullback yesterday down to 30,000 on Bitcoin that also tested the L5. For the sellers on the way down, if it is going to continue, we do have an L4 that's kind of hanging out and waiting at around the 38,000 mark. And this is the zone of interest that we were talking about for the buyers. I'm not necessarily expecting them to make it all the way back to the highs. That's typically not the case. In fact, more often than not, the secondary rally in January, you've got that big pump higher, and then it follows through into a secondary smaller one going into February. That one in February is usually a lower high. So the fact that we're pulling back right now, I think buyers will still be interested, but they're not necessarily expecting this to break away to, above the 42, 43,000s, go screaming higher. That's not typically what happens in January into February transition. This is where things start getting a little bit top heavy, and I think that's what we're kind of seeing right now. We're at least seeing trying to take place. We haven't had enough proof yet, especially with this rotation off the bottom and an L5 holding. But if the sellers start coming back in, it wouldn't necessarily be a surprise to see them flush back underneath the lows once again. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next one, I hope you have a fantastic trading day today, and we will see you all tomorrow. Thanks.